Being an investor lets you work in parallel, and lets you support multiple companies at the same time, and it lets you leverage the network or the resources you have to get that impact out.
What's up, everybody? Welcome to the LatAm Venture Capital Podcast. This is your host, Fernanda Sesto, and in this show, I have thought-provoking interviews with Latinx venture capital investors and fearless entrepreneurs who share their stories of success, challenges, career backgrounds, and market thoughts. Thank you for tuning in today, and I'm excited to introduce today's guest. Santiago Rojas Montoya is the co-founder and managing director of Cube Ventures, a VC firm that accelerates early-stage tech startups in Latin America. Santiago's story is fascinating. Born and raised in Colombia, moved to Florida in the United States after experiencing some turbulent family conflict. He then moved back again and received a JD degree from Universidad de los Andes in Bogota. Previously, Santiago co-founded Startop Co. and Phylo Legal and received awards such as the Kairos Society Fellowship and IBM Global Entrepreneurship Distinction. This is Santiago Rojas. Hi, Santiago. How are you?
I'm good. Thank you so much.
To begin with, I'd love to ask you more about what's your story. Specifically, we'd love to know more what are your core values and passions and hobbies.
Sure. Very easy the question to start with. Sarcastic. Really, my story starts in Colombia. I was born in Bogota. My father, he was kidnapped in the 90s. And then once he's freed, we decided to move to South Florida, to the United States, looking for more safer and better prospects. When we move, like my world from a very young age expands, access to amazing public education in Miami-Dade, and then into my teenage years, we come back to Colombia. I finished school here. My family comes from had a very tough economic times. So then university was only possible with a scholarship or not so much. And thanks to my head, thanks to being one of the top 50 test scores in the country out of 1 million test takers, I was able to access an amazing university in Bogota, one of the best universities in Latin America, called Universidad de los Andes. So I studied on a full scholarship, merit and need base. During that whole period, studied law with a minor in entrepreneurship. But my main strength was math. So I think here's one of my first core values is I believe in having a holistic approach to how you build things. For me, I didn't bet on my strengths in college. I bet on my weaknesses, and I tried to make sure that I had less weak points to be a stronger contributor and potential. At that moment, I wanted to be a business person. I had no idea what that meant, but I sort of wanted to do different things and cool things, and I knew that I had to complete the thing that I understood numbers. People were another thing altogether, and then thankfully I learned about people a bit more. And then my second core value is I believe that talent can be found anywhere. I believe opportunities are created, and you create them through 3 C's. That's what I believe. It's community, capital, and capabilities. So community, there's this wonderful law called Metcalfe's law, applied law in electrical engineering and the rest. It says that a network, its value is equal to the number of nodes squared. So every new person you meet, it's the value that it adds to you in the network is not linear. It's exponential. I think there's a huge power in building networks. Second, capital, of course, it's an amplifier of whatever you want to build, and capabilities is directing that in the right way, soft and hard skills. I studied at university, worked for a company builder called Polymath Ventures. Completely fell in love with startups and knew that I could do it. There was a shortcut to starting things, and straight out of college, no money in my pocket. My mom had just passed away, unfortunately. And one of the last things we talked with her was the possibility of her, us working together, starting a company. So then with her in my mind and my heart, I started my first company, a legal tech. And then out of I used to get into the university's computer lab as an alum, and then work from there. My first friends, they were interns, and then that ended up being my first exit. Years along the road, I could sell part of my shares and discover that with hard work and ideas and tech, you can actually build liquidity, and that's fascinating. I grew that company and then found an amazing co-founder, Camilo Gomez. He then, I wanted him to be CEO, stepped aside and started new things, started three other companies, tech startups. Um, Two closed down, one that raised money and sold it. And then in 2020, we started Cube Ventures, which is now a VC firm that bets on pre-seed companies in Latin America, especially undervalued founders. What we call undervalued is those underrepresented, um, amazing, best in class founders that for no financial reason or no objective reason at all, they have low access to capital. And that can be geographical. That can be because you're a migrant. That can be because of your gender, because of your race, because of your religion, because of your. There's so many factors that make someone underrepresented. It's not doesn't make financial sense to not bet on the best because usually they're more resilient, they have more grit, and they have much more challenges that they've overcome. And in Latin America, we're long LatAm. We believe that this region is amazing. 660 million people live here. If we added up GDP from Rio Grande, from Mexico to Patagonia to Argentina, it would be $5.1 trillion. We would be the third biggest economy in the world. Only US, China would be on top, but then Japan and UK next. And I think we still haven't believed that. Like you can add the numbers, but we haven't still internalized the fact that Latin America has water, has trees, has food, has tech, has amazing talent, has a burgeoning middle class, and has a huge potential for the next century. So we want to bet on that. And that's like the initial intro. Sorry for the monologue.
No, of course. I really appreciated that. Thank you so much for walking me through your entire life and career. It seems like your story is really interesting and has a lot of ups and downs, seems like. So thank you for sharing that. And as you mentioned just now, before jumping into the venture capital industry, you were a founder yourself. So I'm curious to know in what ways you think your experience as an entrepreneur helps you now having the investor role and having the investor mindset, and in what ways it doesn't. Because I've heard from venture capitalists multiple times that sometimes being an entrepreneur in the past can blind you a little bit, but it can also make you more empathetic. So I'm curious to know more about what your personal thoughts are on that.
That's a great question. So I think that on a positive note. So I think the biggest things, um, having been a founder gives me as an investor, I think is, um, it's more than empathy. It's understanding, um, the difficulties behind, P&L, behind a quarter report. Like it tells a story, and even though as an investor you want that 20% monthly growth rate, and you want those healthy unit economics, and you want it up to the right. It's not making excuses for a founder, but it's understanding how the ride is going to be, and understanding some of the sometimes the BS that founders can say, like why we're not hitting numbers, and it's like no, you're lying to yourself. It's just you're blinded by what I also have had the hubris of a founder that I can just push it through. Why don't you pivot? Why don't you stop and think? And on the other hand, also understanding when it's maybe a founder's insecurities, which I've also had a bunch of, that are working against him and or against her and affecting, the potential for growth. So it's understanding the reality behind those numbers, especially at early stage. I had lots of experience at the beginning, and we invested pre-seed, so that ends up being a great match. Where do I think it might not help, that much? I think that I'm still very focused on mm, operation mode, right? So it's like for me, I'm still hustling. I'm still a founder, different type of founder. I'm not, of course, I'm not going to compare it to the challenges that a founder has, but as an emerging fund manager, as a first time fund manager, it is a huge challenge to raise capital, to build out a thesis, to find and source companies, to build a name for yourself, to create credibility. And it looks a lot like being a founder. Um, so I think sometimes it makes sense to take a step back and to understand that my role is not it can be hands on if the founder needs it to be, but sometimes it's like let them do their thing and just make sure that you're not over investing time and resources where it doesn't make sense. I think that's the value of having partners. So my two general partners, one worked at Endeavor, sort of worked at different scale of companies, worked at a fund, built out a CPG traditional company and sold it to private equity. So then he has a different mindset. And my other GP, been she managed billions of dollars in AUM, both on sell side and buy side and alternative assets. And I that's where you have a different like diversity is very relevant because you have different ways to unblock a problem.
Yeah, that's very interesting for sure. And I like how, you recognize that being an emerging fund manager, being the first time that you're managing a venture capital fund, that is a hustle in itself. And it has some similarities to what a founder does. And from what I've talked to like in the industry with other people. So that's very cool. And so going a little bit backwards, what inspired you to start Cube Ventures? And what was the mission? What was the idea that actually propelled it to begin with?
So it's two sides. I think one side is humility. So then as a founder, you have to believe in yourself and you have to like, believe you're the best and whatever. But there's a moment when you think, I had to like stop and understand. And it's like, wait, I'm not the best potential person on the planet. Of course, I can be, but that doesn't mean I'm not relevant and I can add value to the rest. And that doesn't mean that I can be a bridge. I was fortunate enough to have amazing mentors who would buy me a cup of coffee, slap me in the face, or help me like put a shoulder to cry on, whatever was needed at the moment. And they were extremely generous. They connected me with investors. They connected me with clients. They helped me unblock problems as a founder. And I thought, there's so much value in that. How can I give amazing people, much more capable than myself, access to these amazing people that have helped me in the past? And that's the original insight. It's being a founder is amazing. It's addicting. It's exhilarating, but it's sequential. You can only do one thing at a time if you want to do it amazing. Being an investor lets you work in parallel and it lets you support multiple companies at the same time. And it lets you leverage the network or the resources you have to get that impact out. So if it's through company A or through company B, eventually you're going to generate more employment. If you have a strong thesis like ourselves, like focus on impact alignment, you're going to generate a good impact on the world. But that sort of cliche of make a world a better place, you can optimize for that. You can invest for that. You can select for that. You can review and push in the right direction. And I think that's an amazing opportunity. The other side is a little bit also cliche. I think I'm a cliche guy. During pandemic, a lot of people had epiphanies. I had one of those myself, and I had those introspective processes. Cube was born on July 2020, so 2-3 months in lockdown. And I found this beautiful concept called ikigai from Japan, this idea that you should dedicate your life to the cross section of 4 different circles, like in a Venn diagram, right? And those four categories are what you're passionate about, what you do for free. Like second is what you're good at or you think you're good at. The third thing is what it's valuable, what some would pay for that and at a good price. And then fourth is what generates the biggest impact you want to see in the community or in the world. And when I did those four circles, I noticed that I was crazy about the chaos of companies at the beginning. I love that stage of passing from ideas and from abstract thoughts into real things, real products, real people, real clients, real relationships. That a lot of investors don't have the insights necessary to invest at an earlier stage. They usually require more traction and more proof to be able to feel comfortable investing. And the third and fourth thing was like, what can help transform my vision for the region and lots of other people's vision for our continent. And at the same time, I think that I was good at that. I did it 4 times, failed a couple of times, had success a couple of times, and helping other people avoid my mistakes, I think is a value add in itself.
That's really good. I also really admire and agree with having an impact-driven fund or accelerator. And that's one of the areas of interest of mine as well. And so I admire efforts and, starting something like that in Latin America, it's probably more difficult because there's less education about it, specifically on how to fundraise. And I guess now I'm curious to know, how is your fundraising process? How is it? What are some of the struggles that you as a fund manager, and specifically as an emerging fund manager, first-time manager, that you've struggled, or you've seen in the industry so far? The dynamics with the LPs or the capital raising, all that.
Definitely. So I want to comment on the first thing you said, and it's yes. It's sometimes misinterpreted what we're doing. We believe that we're finance first, impact driven. We understand that generating a social or environmental or impact is a good business in itself. Like, it's not one thing or the other. It's not NGO versus private interests. Especially in Latin America, when there are real problems. Last week, we had an event in Miami, in Berkeley, with amazing investors. The guys from IDC Ventures, Max Rife, and Andres Barreto from Techstars Miami, and Victor Javier from Endeavor, Florida. And I loved how they put it. They said, look, in the United States, you have an excess of capital, but you have a lack of real problems. So you sometimes you just throw money at something that's not there. Like crypto coins for dogs as new currency might be a great business, but in Latin America we don't have that luxury. Like we have to build things for infrastructure, for education, for health, for agriculture. Like there are real needs, and when you add them up and you see them globally, they actually have a bigger target TAM than the US, or they can potentially be bigger if you understand very specific niches in the continent. So for us, it's not a contradiction, even though some people might perceive it like that. And then when you go into the second thing you asked, well, I started off being very honest. I was 25 years old, no previous experience as an investor, only as a founder. Very, very low personal amount of personal runway, right? And personal savings. So it was a little bit crazy. And I don't know if we were smart enough or lucky enough to anticipate what was going to happen in the 2021, 2022 craze. We started betting on pre-seed in LatAm a year before, or 6 months before Sequoia, before Anderson Horowitz. They started launching their earlier stage stuff where Tiger started pushing everything going back. Each fund had to start going earlier because hedge funds were starting to invest in later stage VC, and we sort of rode that wave, but it wasn't easy. I have documented 1,200 no's in less than 2.5 years of work from investors. And only a little bit less than 100 yeses. So I think it's not a bad batting average. I mean, it's more or less a decent conversion rate, but it was extreme volume because most of my first investors, our first investment vehicle for the accelerator, it was very specific, very ad hoc sort of structure. We raised close to $1 million on the first one, and 80% of investors are angels, and only a few are family offices or corporates, and it shaped a little bit how we think things through. Like, we understand that we're going to be said no to many times. And with a founder mindset, it's what can you do to scale quality of our product? I heard this from one of the YC partners 2 weeks ago on a podcast. And it's like, a VC's product is his process, and both for the founder and both for the investor. So of course we can always optimize and make our process better. The way we think through, the way we respond to a founder, the way we analyze and study companies, and the way we the quality and the type of people that are on our team. And that's like the second part of the question I'm going to answer right now. But the first part was brute force. It was brute force, and it was making, like, molding reality into submission out of sheer persistence. I was lucky enough to have an amazing co-founder, Lina Cuervo, which pushed with me. And we started in a very small apartment in the living room was my bedroom. And we started from that. And now we have like offices in 3 countries and 3 cities, and we're a pretty big, like a 12-person team, and growing, and it's a whole different thing now. But the first 3 years were very similar to what I had lived as a founder beforehand. And I sort of had to like earn and build my track record. So I don't come from an ex Big Four. I don't come from an Ivy League university. And that's part of the reason why we invest in companies like that. I think we believe in that story. And I was a scholarship student. So for me, the bar had been higher. And I think that's good for investors. That's not good. I mean, it's not a sad story. It's just like I've had some of the social signaling that lots of people have at the get-go, at the beginning. I didn't have that, which is great, because then that scarcity produces creativity, and it produces execution. When you don't have that sort of trust already beforehand, you have to earn that trust through. We have a 108 company portfolio in 9 countries. They've doubled in size in less than 3 years. Out of 108 ideas, we have 11 companies hitting 500K ARR, growing at 20% month over month. And we've done that, with, in Spanish we call it con las uñas. Like, we've done that with a shoestring budget. So I think now when I go pitch investors, even in this climate, even in this market, everyone can say, "Oh, it's so hard right now." But for me, it was so much harder 3 years ago. So I think, and like Latin America, they say, "Whoa, it's a huge crunch. The whole VC market has been like chopped off half of the capital in 1 year." Yeah, but if you look at the years before pandemic, we're still 20, 30, 50% higher than before. So there was this huge like spike that was the abnormality of pandemic, but we're still growing. It's always been hard here. It's always been hard, and it's not getting less hard. And I think that's what let me attract my new partners. My new partners, they're from Endeavor. They've been at billion AUM, and now when I go pitch, I can tell them my story. I can tell them traction, execution, look at the good results we've done. But I can also show these people who have those markers and believe in what we're building and believe in what and want to be part of this and decided to dedicate their life to this. And it's always a little bit easier. I mean, it's still extremely difficult, but that's the overview.
Yeah, definitely the track record is one of the biggest struggles that I've heard from first-time managers, and overall, I mean, for people who want to go into venture, even as an analyst, which is my experience, just you need to build credibility, authority in the space, and it's really hard when you're just starting, especially when you're young, when you come from a unprivileged background. It's like difficult. So I admire that. Okay, so now I'm like curious to know what exactly you look for in a founder. So more thinking about the perspective when you like are investing or doing due diligence. What are the things that Q Ventures or you specifically as an investor look for in a founder?
So we built our own type of matrix based on how we evaluate. We're proud to say that 60 to 70% of our applicants and people who are selected come from cold applications. Usually, VCs the other way around. It's usually a lot from warm, and the other thing is from cold, because there's this trust network that works. And I'm not saying it's the worst thing. Like, we don't want to discriminate against privilege. We love amazing founders regardless for where they come from. There's a huge amount of amazing founders um, that are very well connected and come from wealth and have great credentials and access, and that's great. But what we believe is that we're leaving value on the table. There's a bunch of amazing people that aren't in the mainstream, that aren't in the center, but in the periphery, and they don't know how to get to capital. They don't know how to get to the VC. They don't know how to get, but they can learn it, and they've done sales before. They've done enterprise sales. They've built a company. They've built and they've tried and they've persisted. So they are very valuable as founders. We need to make sure we have our channels open to not miss out. In Spanish, we also say picar piedra. So it's like sort of mining. We need to mine. We have he's trying finding those diamonds in the rough that can overperform. And there's this beautiful report from Endeavor that came out a month ago, and they were the 100 unicorns from Latin America. They analyzed, and then these 100 unicorns, 70% don't come from elite university or an elite ex-employer. So then in LatAm, we look different, and then it's the amazing founders look and have different ways of analyzing. That's what we're good at. We have boots on the ground. We do events in person in Ciudad de Mexico, in Bolivia, in Lima, Bogota. We've done it in Miami, in New York as well. And we've been able to build a strong rapport with each community, with partnerships with universities, with corporates like AWS and Zendesk, so that they can get the word out, so that we can have a strong free press and social media presence that lets us get to that amazing founder that's outside of the mainstream. That's selection. So that's attracting and sourcing and founders. And then when we select them, we're looking for mainly three aspects. Mainly, we're looking for technical capabilities in the founding team. Early signs of growth are a great predictor of long-term success. And early stages are very difficult, if not close to impossible, if you don't have the capability to build in-house. So we don't like seeing dev shops at the beginning, or we want to see the team that has a strong capacity to build in their space, and they've had a personal relationship with the problem they're trying to solve. They've either suffered it beforehand, or worked on it beforehand, or studied on it beforehand, but proven capacity to understand the market they're in. We know they can pivot along the road. That's okay. But we need to beat them. We need for them to be connected with the people that they're working with. Third, we want to see them full time, and we want to see them understanding each other. It's like, have you guys fought before? How have you guys gotten happy after that? Like, where is that mix, so that there's always going to be problems in a company. If the founding team can't find a way to fix them or work through them, that is 30 to 50% of the companies we've underwritten. It's founder problems. So if we can avoid that, that's preferable. And then we're looking for passion and grit. So passion and grit it's not non-negotiable for us. There has to be something that you're in it more than for a quick buck or just for money. There's nothing wrong, and we want to incentivize generating as much money as they can for themselves, for their investors, for their clients, for the stakeholders. But we understand that there are other ways to generate personal wealth, and that usually isn't only starting a company. You have to be completely crazy about what you're building and obsessive enough that this is gonna that fire is gonna push through the next decade. So we want to see long term people, and we want to see diversity among our companies, but diversity inside the founding team. We know that problems aren't solved. Tomorrow's problems aren't going to be solved by yesterday's solutions, yesterday's tools. So you need to have fresh perspectives, and you need to have new ways of seeing the world and different backgrounds and experiences, professional and personal, because usually that's where those unexpected and serendipitous moments come out of mixing things that don't sound like they go together and end up being a wonderful new category, new industry, new way of seeing things. That's the main thing we're looking at. We're looking mainly at the team because we're coming in pre-seed. When we do our follow-on check, we're going to be looking at traction, of course, and obsessed with great unit economics. But mainly as well, we want to see a future great lead investor. So we lead at pre-seed, but we follow at seed to make sure that we don't have a confirmation bias, that we don't believe too much on our choices. And following a leader helps us mitigate that risk.
Yeah, that's super interesting. And I'm kind of curious to know, how do you evaluate passion? Because I know that must be hard to know, unless you spend a lot of time trying to get to know the founders. So do you do that, or how do you actually verify that the person?
We spend a lot of time with our founders. So we're looking at 4 weeks. So we have a strong process to filter out most of these hard skills and soft skills and market size and all these things. And then we start a program with them. This program has no cost. It's our way of adding value to them. And then we work with them during 4 weeks. The best companies receive the check, and then our investment committee approves, and the other ones we say we hope to see on the next potential investment round. And that experience of working side by side helps you mitigate the risk of is this guy an amazing interviewee, and he just knows how to work at that conversation. How does he evolve? How does she evolve during exposure to time? We also have a wonderful investment committee filled with founders and very great regional investors, angel and VCs that we have a very strong relationship with and have 50 plus portfolio companies and have analyzed 3,000, 5,000 companies, and they help us navigate through that selection process. But it's a mix of analyzing the opportunity and the people, and it's working with them directly.
Yeah, I guess it makes sense. That program that clarifies that a little bit, because you spend more time, you get to actually see how they work and how passionate they are about the problem they try and solve. So that makes sense. So okay, the last question I have for you is that this podcast is targeted towards outside investors trying to learn more about investing in Latin America and investing in Latin entrepreneurship. So what is a piece of advice that you would give them? And I'm really happy to ask you this because I think your story is really inspiring, and a lot of students like me, for example, who come out of a background that wouldn't necessarily land a job in venture capital as well, would like to hear about that.
Thanks for that. On the first day of university, all of the scholarship students, they took us to a room, and the university principal, he came to talk with us, and it was very inspiring. We all had got into the program based on merit, based on great test scores and academic background, but all of us had an economic need, and that was why we had been selected. So he said, something I really hit home. He said, all of you are amazing assets. The only thing that you're going through right now is that you're temporarily illiquid. And that was beautiful. It's a little bit financial, I guess. Uh, but it felt inspiring because he told us that we were like, and he let me understand that the greatest resource on earth is called humans. And as humans, like, and we had worked very hard to be able to be extremely valuable and add as much value to others as possible. The only thing that was holding us back was time. It was applying that capability, applying those capacities, and leveraging, well, whatever we could have access to, and applying enough time and with enough repetition, and honing that skill to generate amazing value for ourselves and for others. And I think that's like the most inspiring part. It's like sometimes there's a selection process that says you have to have unwavering self-confidence, and Sam Altman from OpenAI was saying, I have this delirious view of myself, of grandeur and self greatness. I don't think that you don't need to be delirious. You don't have to be absurd or ridiculous to be amazing. I think that it's, applying a systematic application of doubt to anything is the basis of a scientific method. It's a great way to get better. It's a great way to have your head down and be humble and do the work and do it good. But somewhere in your head or heart or whatever, you need to know that you are extremely valuable, and that is scarce. Like being able to give everything you have specifically, and the knowledge you've built, and the abilities you've built, that's unique. And you have to find a way to amplify that voice, to leverage that voice, and to help others believe in it as well. A few months ago, I had a huge imposter syndrome with a specific challenge I was facing at the firm, and it sort of dissipated when I noticed that the reason why we were here and the reason why I was having that syndrome in the first place was because people had believed in me, and that having self-doubt was not servicing myself, and it wasn't honoring their trust. That they needed me to be able to give my all, and I believe that's very important. That it's having and training yourself to trust the process.
Well, thank you so much, Santiago. That's really good advice, and I'm sure the listeners appreciate that. And thank you so much for chatting with me. It was a really nice conversation.
Thank you, and thank you for having me on the program.
One of my favorite things about interviewing investors for this podcast is discovering this type of stories that are very unusual and untraditional. And I think we see that a lot in Latin America. Coming from a low-income background myself, I definitely resonated with what Santiago was sharing throughout the episode, and it's really inspiring for me to meet people like this who are really betting on the future of Latin America and on the future of entrepreneurship in the region. I hope that you learned something new today, and please share this episode with your network and make sure to come back next Tuesday for a new episode.